Hello YouTubers, Alaska Prepper here. Now ladies and gentlemen, you all know that I am not a professional investor at all, and I do not give any financial advice, so do your own homework. However, I thought that I would go over this chart with you really quick because although the Dow Jones and other markets are falling really fast here in the last several weeks, I would say, I've made 3 investments in the last year that have made me 50%, 60%, and 70%. And it's something that everyone can do. But first, I want to go ahead and talk to you a little bit about why I think that the stock market is going to continue to fall, and it's going to fall in a big way. All right, ladies and gentlemen, so I'm just going to wing this, okay? So please bear with me. But check this out. You remember March of 2020 when the market took a dump? It was all the way up here in February. And then by late March, it was all the way down there at 18,000. So it went all the way from 29.5 to 18.5 roughly, okay, 18.4. So that, we all remember, is because of the health crisis or because of the response from the government onto the health crisis. But how did we get all this growth? And that's the question we have to ask ourselves. How did we get all of this growth? Because let me go ahead and measure the growth just in the Dow. Let's go ahead from the bottom here all the way up to the top. We have 99.8%, so roughly 100% growth over the span of what? A little less than 2 years, really. Over the span of about 1 year and 10 months, we had about 100% growth. Well, how did that happen? The question that I ask myself when I'm just thinking out loud is, all right, so the growth of a company or the value of a company is expressed in the stock market by what people are willing to give and or pay for them, right? But is that the real value of the company? So for example, let's just talk about Kellogg's. I have no idea what their ticker is or whatever, but let's just say Kellogg's for something to talk about, right? So in that time frame, let's say that Kellogg's also went up 100%, right? Now, do they have twice as many employees? Do they have twice as many buildings? Are they doing twice as much business as they were before? I would argue to say no. The main reason, there's 2 main reasons, ladies and gentlemen, that I think, okay? And I could be wrong, all right? But please, let's have a conversation in the comments. And we can even talk about this today during our live stream. The 2 main reasons why it's gone so high. Number 1, it's the money creation by the Federal Reserve. So check this out. This is March, okay? This is March when we started of 2020. All the way through December. Look at all of this growth. Look at all of this influx of money going into the stock market. Now let's take a look at the M1. This is the M1 money supply. This is how much money there is out in the economy. And if we take a look at March of 2020, we had about 4.5 trillion or so, right? 4.5 trillion dollars circulating throughout the economy. Now let's bring it all the way up to December. 20.5 trillion roughly. So that's 16 trillion more dollars circulating throughout the economy in whatever form it may be. This, ladies and gentlemen, produced this because cheap money is used. And what I mean by cheap money is money that you can borrow at a very low interest rate, especially a lot lower than what inflation is in real life. Companies borrow that money really cheap, and then they go ahead and in turn, they buy back their own stocks, making it look like there is a deficit of their shares, of their stocks in the market. So whenever there's less of something in the market, the value of it goes higher. So companies borrow money cheaply, they buy back their own stock, the stocks go back up, and they're making money like crazy. Their CEOs are getting bonuses like crazy. So in my opinion, that's one of the main reasons why the stock market has gone up so high in the last almost 2 years or so. But whatever goes up, ladies and gentlemen, must come down. It's just a law of nature. Think about this. Think about a hot air balloon. What keeps a hot air balloon up in the sky? Hot air, right? There's a little motor with a heater or whatever that shoots hot air up there. But what happens if that motor or that engine that runs that hot air, what happens when it runs out of fuel? Well, there's no more hot air to keep that hot air balloon up in the sky, and it's going to come back down. Well, you can picture all of the liquidity that the Federal Reserve and the government have pumped out into the market over the last couple of years. The $16 trillion that they printed out of nothing in the last couple of years, you can think of that as the hot air that has made the stock market go up. And now they are running out of easy money. They are running out of hot air. They are running out of liquidity. So what's happening? We are starting to go back down, ladies and gentlemen. That is what's happening. There's something on this chart that convinces me that we are in the beginning of a long-term bear market, meaning that this may not drop tomorrow straight down, but it is going to be on a course downward. And let me go ahead and show you what that is. It's a little bit of technical analysis, but it is so very simple that anyone can understand this. Let me go ahead and enlarge this chart a little bit so that you can see what I mean a little easier. So we're bringing this down. Let me enlarge it a little more. I always have to remember that I'm putting this on your small screen, so I have to enlarge it. So here on our way up, around November of 2021, we hit a high in the stock market. Then we went back down. And then we hit an all-time high back in January of this year, 2022. Then we came back down. And then we hit a lower high, and this is key. This lower high that we hit after our all-time high is lower than this high right here. This pattern right here, and bear with me, I'm just going to go ahead and try to, do this without doing too much editing, all right? This chart right here is called a head and shoulders. And this is here, this is one shoulder, okay? If you take a look at the high, this is the head. And then if you take a look at this part right here, this is the right shoulder. So you have a left shoulder, which is a high. Then you have a head, which is an all-time high, all right, or a higher high. And then you have a right shoulder, which is a lower high than your left shoulder. And just to give you an explanation of what a head and shoulder pattern means, let me go ahead and bring it to this. What is a head and shoulders pattern? A head and shoulders pattern is a chart formation that appears as a baseline with three peaks, where the outside two are close in height and the middle is the highest. In technical analysis, a head and shoulders patterns describes a specific chart formation that predicts a bullish to bearish trend reversal, meaning that we're going from bullish to bearish. The head and shoulder patterns is believed to be one of the most reliable trend reversal patterns. It is one of several top patterns that signal with varying degrees of accuracy that an upward trend is nearing its end. That, ladies and gentlemen, are a few of the reasons why I believe that this market is headed back down. Now, am I saying that it can't have up days? Absolutely it can. I mean, look at this. This was an all-time high. Then it went low, really big time. Let me see. This went from... This took a 6.5% dump just in a matter of a few days. So it can have its down days, it can have its up days, but as long as all of these next highs, you see low, and then the next high is a lower high than the last one. And then you see this next high is lower than this one. And then you see this next high is lower than this one. Now there may be a day or two where it just shoots up, just like it did here, where it had like a 1,000-point gain that other day, 960 points. But look at what happens, ladies and gentlemen. The trend is down. The trend is going downward. All right, ladies and gentlemen. So that is why I believe that the stock market is going to continue to head down in the long run. However, there is one caveat that I want to add to this. Why this is happening is because the liquidity is being taken out of the market. Money is more expensive to borrow now. Interest rates are going up. What I believe can happen, and probably will, okay, probably will, is that when the market has felt so much pain and the Federal Reserve has maybe increased interest rates a few more points, maybe brings it up to 4 or 5%. I doubt they'll ever get that high, but I'm just being hopeful here, right? Let's say the Federal Reserve brings interest rates up to, I don't know, 2.5%, 3%, 4%, whatever it is. The market is going to be crashing so much that they're going to reverse course. They are going to reverse course in a big way, and they're going to start pumping dollars back into the system, just like they did back in March of 2020. They will come up with a crisis as to why it is that they have to do that. It's in order to save the world. Whatever it is, they'll come up with a crisis as to why they have to do that in order to pump up the stock market. Also knowing that when they do that, it destroys your purchasing power. All right, ladies and gentlemen. So here in the stock market, in the last year, let's take a look at how much people have made in the last year. I haven't even checked this prior. So let's go back to, we're in May this year. So we are in May. Let's get our little ruler out here. Let's go all the way to May of last year. Okay, so from here, actually from May of last year to this year, we've got negative 2%. So if you were investing in the Dow Jones in May of last year to this year, right now as of today, you've lost about 2%. Well, ladies and gentlemen, I have 3 investments that I've made within the last year. The first one, I made 52%, I believe it is, all right? So in this investment right here, I made 52%. And let me show you what it is. I've got it right here. See this right here? I bought this sometime last year, actually a little more than a year ago. But when I bought this right here, all right, I paid, I think it was $10, $9.99 for a case of 6. And right now they're selling for $16. Actually, it's more than 52%, right? I made 60% on this investment. 60%. Let me show you another investment that I made last year. And let me show you how much I made. So this investment right here, you see this oil right here that I get at Costco? This, when I started buying this about a year and a half ago, it was $20. It was $19.99. And now it's about $34, right? About $34 or so. That is a 70% increase. That is 70% return that I've gotten on this olive oil right here that I get from Costco. And then if you take a look at this rice here that I bought last year, I bought this around, man, it wasn't even a year ago. It was like last September that I bought this rice right here. And you all know this is my favorite rice. I bought this for $27 a bag. And today, this exact same rice, the same amount of calories, the same 50-pound bag is going for about $41, $42. So if we say $41, that's $14 more. That's about 60% roughly. So I made roughly 60% return on this. I made about 50 or 60% return on my olive oil, and I made about 60% return on my rice. That, ladies and gentlemen, is a real investment in knowing that you're going to have the things that you need, instead of investing your money in a fake market that is completely manipulated by the money changers, the people that get to decide how much they're going to charge you to borrow money when they lend it to their friends at almost 0% interest. That is how the game is rigged against you. That is why I say get out of debt as much as you can, because every debt that you get out of, when you get out of debt, you're destroying money. If you owe $10,000 on a car and you pay that $10,000 off on that car, that money just died. That $10,000 is no longer in the system and it just died. The system cannot exist without debt. That is why if we all got out of debt, we can really make a change. I know that's easier said than done, but it is the truth. All right, ladies and gentlemen, and that is the same way that the Federal Reserve / the government, because they're 2 in 1, it is the same way that they keep the working class and the poor poor. Why? Because the working class has to actually work for what they earn. They have to exchange labor for that fiat currency that they print out of thin air. Whereas the wealthy class, all they do is they borrow money at very, very cheap interest rates. Then they take that money and invest it in assets that go up with inflation. The only thing that doesn't really go up with inflation, ladies and gentlemen, is your purchasing power, is your labor. Ask yourselves, did you get a 10-15% raise this year wherever you work? No, you didn't. You probably got less than 8%, which is the official inflation rating for this last year. I think it was like 8.5 or something like that. So if you didn't get a raise of 8.5 or more, you're underwater. It means that you're working for less than what you did last year. But if you were wealthy and had a very high net worth, you can go out there and get a loan for 1%. Just like Zuckerberg did several years back, where he got a $41 million loan at 1% to buy a property. And I asked myself, why in the world would he get a loan? He's a billionaire. Well, exactly. That's why he would get a loan, is because he's pretty much getting it for free. Because if inflation is at 2, 3, 4, 5, 6, whatever percentage, and you get it at 1%, you're already winning. All right, ladies and gentlemen, that is how they keep the rich rich, and that is how they keep the working class and the poor poor. So invest in this. And I'm not a financial advisor. Invest in this, because this you can always use. Heck, you can even use the can after you're done eating the contents from the inside. But this right here, ladies and gentlemen, this is a big casino, and it is a losing man's game. If you get into this, you're going to lose. I know that there are people out there that are professional traders, all right, and they do this for a living. However, what percentage of the American population is a professional trader, ladies and gentlemen? Ask yourself that. Are you a professional trader? And if you are, and you make money doing this, great, because the way I see it is you're taking some money out of these people that are stealing it from the rest of us. All you're looking at here is a wealth transfer. Every time that you see one of these lines go straight down, that is a transfer of wealth. Ladies and gentlemen, that is exactly what it is. And this stock market has one way to go, straight down, and is going to continue to go down for a very long time. I believe that even after the Federal Reserve goes ahead and starts pumping more money into the system later on when things get really bad, even as the stock market is going up, in reality, it'll be going down. Because take a look at Venezuela's stock market. I think last year was the best performing stock market in the world. But what can it buy you? All right, ladies and gentlemen, when the stock market goes up to 1 million, is it going to be able to buy you this? Is it going to be available for you to buy this? Invest in whatever you want to invest in, but I rather invest my money, whatever I make, in things that are real, that actually keep their value, and that I know I'm going to be able to use. All right, ladies and gentlemen, just for the fun of it, let's take a look at the dollar. I remember talking about the dollar a long time ago on this channel. It must have been 2-3 years ago. And I said that once the dollar passes this trend line, and I still have the trend line that I drew back in that video, and I don't remember when it was, but it was a really long time ago, more than 2 years ago at least. I said that once the dollar passes this trend line, that it's the point of no return. Well, not the dollar, the 10-year bond. All right, so let's take a look at the 10-year bond. And look at this, incredible. Let's go ahead and open up that trend line. Boom, there it is. And look at this, ladies. And this was a really long time ago that I drew this trend line. But I remember mentioning that once the 10-year bond, which is the bond that we want to look at, in my opinion, when we see this 10-year bond just shoot up, all right, just shoot up, meaning that nobody wants to buy it. All right, the higher that the 10-year bond goes, or the higher that bonds go, 10-year bond, 30-year bond, the higher that they go, it just means that the less people want to buy them. Right, so they have to offer a higher interest rate. But when we see this just take off in a couple of days, just go straight up, that, ladies and gentlemen, is going to be our signal that the stock market is going to do a quick crash. But I remember telling you all that when this trend line gets broken, it's going to be the point of no return. That it's just going to continue to go up. And so far, it hasn't even challenged this trend line. It's just been going up and up and up. Now, in 4, 5, or 6 months, however long it may take, when the Fed comes back and says, we can't take this anymore, we have to lower interest rates, it may go back down. But we'll have a whole new set of problems when that happens, ladies and gentlemen. So in my opinion, I will take what I have now and spend it on things that are real, that will add value to my life. You know, a piece of paper or an electron that's within a system that you don't even have any control over, to me, adds no value to my life. Whereas this adds value to my life. It's insurance. It's insurance that I know is going to provide my family with sustenance later on when all of this finally crashes down. Because mathematics does not lie, ladies and gentlemen. And eventually, people will wake up to the fact that everything's been stolen from them. And I would rather be at home when that happens than in the supermarket or the gas station trying to fight over a crumb of bread with people that are ticked off because they've lost everything. Having said that, I hope that you have a great day. I hope that you join in this afternoon during our live stream. It's going to be at 2 p.m. Alaska time, 6 p.m. Eastern time, right? Yes. So hope to see you there. Remember to be good to each other. When good people do good things happen. Remember to reach one, teach one, and repeat. If we all did this, the world would be a better place, and you know that it will be a better place. Many blessings to all of you and your families. I'm Alaska Prepper. I'm out.